Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iagino, who's not quite here yet. So, how is everyone doing? A nice choppy end of the month day. Hope everyone survived. Good afternoon, Davey. How are you doing? Let's see. While we're waiting to get going, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back and leave comments and like, or if you don't like the video, dislike. Give me a multiple thumbs down if I really said something that was wrong. So, and please do take the time. It takes me a lot of time to do these videos, and I think we can get some more comments than we've been getting. Some of you are really good at it. Some regulars just don't leave comments, and I'd really appreciate to help us get wider distribution. So, hey, Patrick, how are you doing? Thanks also for your comments. What about Bob? I don't know. Maybe Bob's taking baby steps. Hello, Options 22. Happy Tuesday to you too, Connor. Thank you for being here. And you see the mixed market behind me. Well, actually, a fair amount of red, like in healthcare, which could be some end of the month. We had that nice little run up in healthcare end of month, some profit taking. Amazon, pretty big up day today with that double going on. Little toppy price action in oil, and with that little reversal in oil, I'd be aggressively raising stops from my perspective. I'll bring on Bob in a second. He's in the green room. So, we had the Chicago PMI coming out with a little surprising beat of 5.3 point beat. Consumer confidence also coming out higher than expected. Dallas Fed index down substantially. Just wanted to cover that again. The 50 basis point rate hike still pretty much baked in, and getting closer to that neutral gamma area of 42.59, but not quite there yet. So with that, oh, by the way, after hours earnings, Salesforce, they were up a little. They did beat on earnings, but guided lower, and I didn't see what HP, when it was up a little after hours, but I did not see the earnings going in there. Not much going on tomorrow morning for the big things, but tomorrow afternoon for GameStop. So we shall see. That's where we sit now. Now I can bring the one everyone has been waiting for. Ken. Welcome, Ken. Biden and Powell killed it today. Hello, Christoph. Now, here is Bob. Oh, you got the Blackhawks shirt on.
I got the Blackhawks shirt on today.
In the middle of summer.
Well, yeah, it's a T-shirt.
Is that still politically correct? Can you wear that?
Yeah, because this is actually a tribute to one specific indigenous, I don't know what they're even called anymore. It's not like a cartoon representation. This is an image of an actual Chief Blackhawk. So it's like if you called yourself the George Washingtons rather than the powdered wig white guys.
I'm still not getting the difference, but
I don't either.
I'm just too old for this stuff anyways to figure out what's right and what's wrong, what's been canceled, what hasn't.
No pressure for the Blackhawks to change their logo at all, as there was for the Cleveland Indians, Washington Redskins. And my understanding is the main reason is because Chief Blackhawk was an actual guy in Illinois, and it'd be like putting, I don't know who, Lewis and Clark, I don't know. Who would it be like putting Mayor Daley on there? I don't know.
Mayor Daley?
It wouldn't be like a knock on Irish people if you were the Chicago Dailies and there was a picture of Daley on there.
All right. I'll take your word for it.
Exactly.
Sterling is starting to like futures trading better than individual stocks.
There you go.
There you go. See, that's why
Sterling's going to become a very big fan of the Futures Edge podcast then.
Yeah, which if you haven't watched, a new episode went up yesterday. No rest for the weary, even on Memorial Day. Posting the podcast.
Working hard.
So, what are your thoughts about anything, Bob? We got Chicago PMI beat, consumer confidence beat, Dallas manufacturing miss.
Yeah, the consumer confidence wasn't. I mean, it was a beat, but it was still a pretty big drop from where it was, 1064 from 1086. So you have that. Chicago PMI is a very small number. It's on the low end of the data that came out, so I don't think it had any effect at all. I don't think it ever does. We don't have as much of a manufacturing base in Chicago. I say we. I haven't lived there in almost 2 years now, but we don't have as big of a manufacturing base, so the purchasing managers index is just not that widely watched. That's why you'll see it on the low. It's just very regional. The national PMI matters more. The Case-Shiller Home Price Index, as expected, because it's a year-over-year number, so it beat, but it doesn't surprise me that it's higher. You saw the year-over-year house price index miss slightly. The index itself, that's missed the expected rate of change, obviously. So, and also those were March numbers. So we got March, April, May. It's a pretty dated piece of data, looking at it from that perspective. So I didn't see any real interesting data at all. Canadian GDP missed dramatically. Thought that was interesting. Their annualized growth rate was expected to come in at 5.4. It came in at 3.1. And this is with what? High inflation in Canada. Also, UK inflation. I don't know if you talked about that, but the UK inflation rate is at a record high now. So there was a little talked about revision to it that brought it to 8.1. So it's the highest rate they've ever seen in the UK.
And yesterday I did talk about Germany, and that was
Mm-hmm.
this is making our Fed look aggressive compared to the ECB. I mean,
I know.
I don't know what they're going to do. I mean, they have some issues. I mean, we have issues, but they really got some issues.
I mean, I got an email from the people at TD Ameritrade. I normally do a spot on their network tomorrow, but I'm not going to be doing it tomorrow. I've got other things I need to get done. But one of the things they wanted to talk to me about was the ECB pivot to more hawkish. I don't know that I've seen that. I think I've just seen. We talked about it 2 weeks ago when Christine Lagarde she put out that blog post on the ECB's website saying that they were going to have to get vigilant and get against inflation at some point. She didn't really say when. But yeah, I don't know that they've actually pivoted yet. I would honestly say they didn't. We had there's finally an agreement on crude oil from Russia banned in the EU, but it feels a tiny bit toothless, mainly because it would take effect 6 months after adoption, and it hasn't even been voted on yet. And there's an exemption for pipeline crude. It only applies to sea-bearing crude oil, and petroleum products delivered by sea. Now, in fairness, that is 2/3 of the Russian crude that goes there, but it's you still got the pipeline. So the countries that were going to veto the ban, like Denmark, for example, mostly get the stuff via pipeline. So it's kind of a toothless ban. Also, when you consider that Urals, which is what Russian crude is called, like Canadian crude is the oil sands. Russian crude is called Urals, and Urals trades at about $73 or $74 a barrel. That is a huge discount to Brent. I think last I saw Brent was over 120. Huge discount to Brent. Now it always trades at a discount to Brent, but this is the widest that spread has been. And literally, they're still selling the same amount. They're producing a little less, but they're still selling the same amount. And it's all going to China and India, who don't care about the sanctions at all. So that might actually be part of the reason that crude oil is grinding higher rather than spiking higher over these last few weeks, is the amount of crude oil that's still getting out there from Russia.
And today we had on that news, we had a nice little potential short-term topping pattern.
Right.
So after spiking through to the harmonic, so I'm watching with cycles rolling over and RSI hitting the overbought level for a potential short-term pullback. Uh,
Do we want to talk about Biden and Powell?
sure. We got, hold on. We can. Biden and Powell killed it today, so you can bring that up. We already had the comment been put in.
Well, so first of all, I don't understand the meeting. The Fed is supposed to be independent. So if Powell actually did anything shady or changed course quickly after this meeting, he looks like shit, right? He looks like he's not independent. They talked about the meeting beforehand as President Biden wanted to call Powell and Yellen to the Oval Office to remind them and reassure them of the Fed's independence. What?
You wouldn't have called him to the White House, would you?
No, I mean, every once in a while, Ron DeSantis calls the governor of Georgia and says, just want you to know you're a different state. Just want to let you know that. Right? I mean, why would you have the meeting? And then it says Biden punts inflation response to Fed. Well, is that basically so that he can go out and say, I don't understand why. Is it basically so that he can go out and say that, we rely on the Fed for that? It's not our fault. The Putin inflation hike, the Fed's taking care of it. There's literally zero reason to punt it to the Fed when it is in the Fed's mandate and they are already independent. I don't understand it at all. President Biden said Tuesday that he would take a back seat to Fed Chair Jerome Powell as the White House grapples with decades-high inflation and the central bank weighs more interest rate hikes. Many fear this could lead to a recession. This is the New York Post.
I have a question.
I'm meeting with the chairman today and Secretary Yellen to discuss my top priority, that's addressing inflation in order to transition from historic recovery to a steady growth for American families. And my plan is to address inflation starts with a simple proposition: respect the Fed, respect the Fed's independence, which I have done and will continue to do. So the number one priority is inflation. And he's basically saying inflation is yours. That's the way I translate this article.
Now, I have a question.
Yeah.
Do you honestly believe the Fed is independent and apolitical?
No.
See, because I for years I thought they've shifted into the political realm and lost whatever shred of independence they pretended to have.
When I thought they lost it? When people started knowing who the Fed chairman was. Like literally, you can walk down the street and talk to average everyday business people and they know who the Fed chair is.
So you're going all the way back to Green. Well,
that wasn't the case during Volcker.
Huh?
That wasn't the case during Volcker.
No, but people learned who Volcker was after he hit 20% short-term rates. I mean,
also like his whole thing was the money supply, right? It was less about rates. I mean, remember when money supply, which came out in the afternoon, was actually a big number.
Yeah.
Right. We used to wait for the M2 and the M3 figures to come out. And remember, they came out in the afternoon after interest rates had already closed the pit. Or a few minutes before, I don't remember. But they were definitely, when Greenspan started giving these speeches, right around when CNBC came to prominence, people started knowing who the Fed chair was. And that's when it just kind of went to hell, because this Biden-Powell meeting smacks of something fishy. Just something goofy. I don't know what, though.
Well, yeah, people are not happy about inflation. Hey, Dan Jett. I see Josh 317. Groceries are going up every week. I shop for them. Every item nickeled and dimed, as if we wouldn't notice.
Yeah, I went out this afternoon to buy stuff for dinner, and it's dinner for two people. And my groceries, I only bought the things I need for this particular recipe. I bought nothing extra. The only thing that was extra was about 2 ounces of tomato paste. The rest was all needed in the recipe, and some of it I already had, and it was $52. And I thought, without alcohol, that's generally the price of a dinner. When we used to go out, it used to be the price of a dinner. $22, $23, maybe split an appetizer, no dessert. Literally going to the grocery store was the price of a dinner for two today.
Yeah, it's insane. I mean, our
Mhm.
my because I track our we pretty much cook at home all the time with having all the dogs. We don't leave them that often.
Yeah.
But over the last year and a half, I mean, our we used to be able to do it was roughly for dinner cook at home was 12 to 15. Now it's 22 to 25 per meal.
Yeah. It's,
It's absurd. And this is before all the, you have all the diesel at these record highs, and that's going to affect everything. You have all the fertilizer issues and crop issues and everything else, and that's all coming down the pike still. So,
yeah.
and I mean, gas here, I filled up today, and it was over with the cheap stuff was over $5 a gallon.
Yeah.
So, yeah. Hey, yep, Christoph. Well, Lagarde started to acknowledge the issue. That's with the
It's true.
ECB and inflation. Acknowledge the issue, but acknowledging it and doing something about it are two very different things. It's going to be
Yeah.
very
That's
interesting.
right. Who said that? Christoph?
Christoph.
Christoph, that's very much like standing in the rain for 15 minutes. You're soaked. Then you turn to the person next to you and go, well, it's raining, isn't it? And you still don't pull out an umbrella.
Yeah. Wavy, are you a little late to the party, or is the ECB a little late to the party? uh, Biden punted the inflation straight to my bank account. Yeah, Biden and Sterling. Oh, what Sterling? Biden probably just wanted some friends there for story time before his afternoon nap.
Listen, like Biden, this is my opinion, not necessarily Mike's. Biden bears some responsibility, especially on the energy side. Um, Putin bears some responsibility, obviously, on the food side, and to a certain degree on the energy side as well. But the energy side's very telling because literally crude oil was up 73% before they were even building troops up along the border of Ukraine. So there was something going on there, and it was a lack of leases and a lack of pipeline space and a lack of FDA clearance to build more rail cars to move crude oil and things like that. There's a lot of it. But there's a lot of blame to go around. The one thing it's not is just the Fed's fault, but it's also the Fed's fault. Because if they would have attacked inflation in May or June, like Mike and I were saying back then, and a lot of people were, not just us, then they would only be dealing with the Putin inflation now. Okay, that's the big thing that escapes people when they try to politicize this in their own thinking. Is you start to say, well, if Putin hadn't done this, prices wouldn't be so high. True, but they'd still be high. They were already high and they got higher, right?
Hmm?
And they'd still be above the Fed's 2% target. So encapsulating that within markets, okay, um, you have to look at it as the part that we look at and the part that we have any sort of analytical control over. In other words, we can look at charts and figure out what's happening on a price action basis is the Fed. It's not Biden and it's not Putin. And it's not other things like the increased demand. Look, you have to think about what the lockdowns did also to drive inflation. We can argue about whether the lockdowns were smart, stupid, insane, asinine, ridiculous. You might be able to tell what I think with that rant. But you got people who are they don't care what the prices are now. They want out of the house, which would not necessarily, I posit, wouldn't have been the case if it weren't for the lockdowns. People would be like, oh, man, we were going to drive to South Carolina for Memorial Day, but the gas is crazy right now. Well, now they're like, I've been cooped up for 2 years. I don't care what gas is. I'm going anyway. Plus the stimulus that was given in the form of checks added to the savings rate, which gave people a cushion as inflation started to rise to continue to spend on those things. And then, of course, the supply chain. So there's a lot of responsibility to go around. But when the White House calls it the Putin price hike, it's not accurate. When Republicans blame Powell and Biden, it's not accurate. It is just an entire alphabet soup of mistakes.
Yep, that pretty much sums it up. But again, I think in the controllable stuff, the Fed just put itself so far behind the curve.
They have to be aggressive to the point of recession. There's no way
And
around.
with keeping the QE going through March, that was just
Yeah,
absolutely absurd that they couldn't even dial that back.
right.
So, and then there was the perfect storm. And there's also been still the storm of additional Chinese lockdowns could hamper supply chain things even longer.
Right.
So, Wavy of, oh, hold on. Hey, Lauren, welcome, welcome, welcome. Thank you for being here. Wavy, if prices at the store are double and wages don't increase much at all, what's next?
Say that again, please.
If prices at the store are double and wages don't increase much at all, what's next?
I mean, that's so in a weird way. All right. I heard a really political take on what's going on here. And I'm going to throw out this a political take, and I don't think this is the case. Okay. But it did accurately describe what's likely to happen. So the political take was Biden wants the Fed to do this because they want the Fed to be ultra aggressive because at some point companies will stop hiking wages because their revenues will go down. People will suffer, spend less, and it will eventually drive prices down. And the Biden White House could then blame corporate greed and them not wanting to pay their workers for the reduced wages. That's the politicized take. I don't agree that that's what's going on, but from a standpoint of what's going to happen, companies will stop raising wages because as prices go up and people buy less of the things that are now at a higher price, they can only raise wages to a certain level before their margins get squeezed. And they're just not going to do it. They're just going to produce less. And that actually is going to extend inflation a little bit longer, right? You'll see things like there's something called packaging inflation, or you could call it sizing deflation, right? Companies will actually shrink the size of a product without saying they did it, keep the price the same. You'll see a half ounce less of cereal on the box, right? You'll see a quarter pound less on a loaf of bread. It'll be 3/4 of a pound instead of a pound, but the price will stay the same. That's the thing that I think is already happening because I've noticed it a couple places anecdotally. But essentially, companies will stop raising wages because their margins are going to get squeezed and they're not going to be able to continue to raise wages just to get the employers. So they'll just stop producing as much. They'll cut shifts, and the products they sell will still be profitable. And then the stock market will readjust again. And then we'll have that unemployment uptick that we're looking for. I think that's going to happen sooner rather than later.
Now, I have a question from a political standpoint, since we already
Yeah,
talked about the Fed being completely non-political.
of course.
If, and I have no knowledge of this, but if Biden was going to try to influence Powell and the Fed, do you think he cares as much about the stock market dropping, or that the Fed gets much more aggressive on inflation because inflation hammers his voting base pretty hard with the midterms coming up? And if you don't
So
start getting this
that,
under control,
okay, so if I can go to the political part of today's meeting, which I have no inside knowledge of this, but I think that's what the meeting was about. The meeting, in my mind, if I think it through, what could it possibly have been about? It was about Biden and Yellen going, "Don't worry about the stock market, let it get crushed. Just let it happen."
because
Because we
I did,
have a scapegoat already, and it's going to be billionaires.
yeah, I didn't talk to you earlier about this, but I came to that same mindset conclusion that I'm like, forget the stock market. You got to just keep hiking, and you got to get, even if we hit a minor recession, because every time people are going out, you go fill up your car, you go to the store, everything's more expensive, and we got midterms coming up, and we got to see somewhat of a dent been put in this, even if you drop the market another 20%.
Right, right. And we'll start to get that inflation, or I'm sorry, not inflation, the layoffs, the job losses. And you watch when they start talking as they get in toward the midterms and then in toward the potential Biden reelection bid, if there is one, they'll start saying, these greedy corporations started laying you off because the Fed started acting and hacking away at their record profits. So they started laying you guys off, and they're the evil ones. And we're going to protect you. We're going to pass laws that stop this. That's going to be the pitch. And the Republicans' pitch are going to be Biden caused all of it, which is also not true, by the way. Not true. Partially true, but not true that he caused all of it. I would put the biggest, personally, put the biggest bunch of blame on Powell and the Fed. And that, to Mike's point, to me, proves they're political, because he waited till he was renominated, and then he waited until he was confirmed before he got aggressive.
And they're still not super aggressive, though. I don't think this is super aggressive.
No, they're not.
And, also they create, with keeping interest rates so low for so long and all the additional monetary stimulus they did, it drove the market to oversized returns, let's say, for the past little bit. Mm-hmm. So, now you're just dialing back some of those oversized returns. And with rates being so low, it also, look at the unprofitable tech index and where a lot of those companies were trading versus where they're trading now. Yep. So you drove this with this cheap monetary policy, and now you got to get it out of here, and you're still not being super aggressive. So are you still leaning towards the 2 more hikes and then a potential pause, or 3 more hikes and a pause, or are you saying
I'm going to stop saying that, but I'm still thinking that's what happens. But given the developments over the last day and a half or two, I'll probably stop saying it. I'll just announce when I want to see some more Fed speak, but I'll announce in here when I've dropped that, because apparently, again, that could be part of what the meeting today was about.
I mean, that was Walker yesterday who said, Waller, sorry.
Yeah.
That was like, no, we got to keep going. He
said he would be behind continuing to go, and then he also said, even if we don't go 50, I'd rather see 25 rather than stopping.
So just dial it back at some point, but continue
the rate hikes, but start doing them at a 25 basis point clip instead of a 50 basis point clip. There's a lot in there to read.
Yeah, well, there's a whole bunch. I'm skipping some comments because we know what you guys think. The whole mess is insane, and they are washing their hands. And Raj has a different take. I think it's different. It's going to be reduced hiring, more firing, and workforce reduction to pay for higher wages. So that's Raj's take.
That's interesting, Raj. I think that's an interesting take. They might say that, yeah. They might say we have to cut shifts because we can't afford so many workers at that rate. That's an interesting take.
You know what I'm also seeing? I mean, this is before what's coming, is because there's still an issue, especially for the lower tier jobs, I'll call them. But I'll pop into Chick-fil-A to get some grilled nuggets, and there's plenty of times there's those reasons here because their lockdowns are done, but I'll go in because I order with the app and go and just pick it up off the shelf. But there are days where it's like dining room closed and they put up a sign, we don't have the staff to, and they have hiring signs, and they're like, we're paying $19 an hour for Chick-fil-A.
So there's a new sushi and Thai place, and I'm getting off the subject a little bit, but Thai was the only food we couldn't find down here that we really liked. Everything else was up to par, up to standards, but the Thai food just was not good. So this place opens up down the street. We go there. I get pad Thai, which is really the only thing I get. I don't know why I'm talking about Thai food as if I know something, but pad Thai is the only thing I ever really get. And I got it, and it was delicious. So I wanted to go back and get it again. And we went in, and she said, it's going to be about 15 minutes. I go, well, we know it's hot outside, but we'll sit outside. No problem. She goes, I'm not doing outside. I don't have the staff to open our patio, period. So they had 2 servers inside, 1 bartender, 1 sushi chef, and the host. And that's it. They didn't have the staff for the outside. We're seeing that more and more and more.
Yeah, so, and that goes to potentially Raj's point, because people are starting getting used to this now. Like, okay, the dining room's not open, literally because it's short-staffed. Now, if companies still have to pay more, And people are saying, okay, I'm sort of used to short staff. They could theoretically keep the staff reduction down and just pay the good people a little more to help offset some inflation. But hey, we're cutting services back
Yeah.
because you can walk in to pick up your order you placed with the app, but you're not going to place the order in the restaurant.
Mm.
So
Like,
we're in interesting times. Raj again, however, because the people with more money will keep bidding on the same supply, you'll have a gap between poor and richer get bigger.
I mean, I guess if you're talking about something like houses or cars, sure. Not going to matter for like chips or crisps, as Waka Waka called them.
Uh,
Like, look, the rich aren't going in there and paying more for chicken breasts. The price is the price,
yeah,
right? Which is what I bought today at the store. It was a couple packages of chicken breast, but like I wasn't in there going, "I'll pay $15" when they were 12.29.
you
But for
weren't you
large,
weren't bidding the price up.
what's say it's the same thing. Like iPhones are what they are. Apple comes out with the price, and that's it. Same thing with computers. Same thing with washing machines. You don't go in there and bid them up. It's really just cars and houses. But the demand naturally bids it up.
Yeah, Ted, welcome Ted. By the way, Bob is spot on with the same price, less product comment. Yeah, but
That's only not true with Ferrari, Ted, but with everything else it is.
well,
Ferrari's got a better product and
did
higher.
you watch the Monaco Grand Prix?
I did.
Red Bull pulled it out.
Oh,
Uh, we are already going through packaging inflation. It's insulting. 1 pound used to be a large packet of sharing crisps, but the size now is a single packet. I kid you not, it's tiny and half filled. Yeah,
hmm, see that all the time.
I've literally I've seen that too. The boxes are the same size. I open it up. I'm like, this can't be right.
Yeah.
It's not a little less. It's like
It's funny. You see cereal. One of the places you can notice it the most is in cereals because they roll out the different flavors all at once. So they won't roll out. So Post, for example, makes mini wheats and Cheerios, right? They'll roll out all the Cheerios at once. But if they still have mini wheats, they'll leave those till the supply gets lower, and then they'll roll out all the mini wheats as one, and the box will shrink slightly and it'll feel full. But literally, they'll take an ounce and a half, 2 ounces out of each box. And that's millions and millions of dollars a quarter that they save doing that and leaving it at the same price. So when you see the boxes that used to be the same height, all of a sudden you'll see this, right? A little shift in sizes of the box. And that's when you know it's happening again.
yep. Let's see, Raj. Thank you again. Great info. Mike Bob, it's just speculation, but I wouldn't put it past the CCP to have zero calls COVID policy strategically to hurt us right now. That's
Sure.
I
Why not? I
I've
mean,
thought about it.
they've done worse.
I wouldn't put anything past them.
Yeah, they've
Uh,
done worse.
Mike, if the Fed gets any more aggressive, ES will be back at 2,200. They have to get a lot more aggressive before that happens, but I wouldn't be surprised. Uh,
Let's just say I wouldn't have a short with that as my target, but it certainly could happen.
Are we done with short-term bullish, back down, or bearish again? I'll review that once we're done with Bob. Waka Waka thinks zero COVID hurts the West more, and I think they. I don't even need to get into that.
I
Sterling's.
mean, I guess so. Let me just touch on that real quick. I don't know that it hurts the West more. I guess it depends on what you mean by hurt. The Chinese populace gets really hurt by that, but they don't have as far to fall as the West does. So if you're talking about the size of the gap, you might be right. If you're talking about, keeping the same 56-inch TV because I can't find a 72, that's a pretty big fall, but I'm still okay. I don't mean me specifically. I've got a 72, but go ahead.
From Sterling, Chinese banks are having a hard time getting businesses or individuals to borrow enough money to meet mandates because of potential COVID lockdowns. How can that affect our financial markets here?
That's actually an interesting comment. So a lot of that money is used like credit lines. So Chinese banks they're mandated to make these loans, and they make these loans, but they treat them like U.S. banks treat credit lines, right? So we had some friends down here in Naples this weekend, and they own an electrical contracting firm, and their bank just pulled their line of credit, which means their employees, their union dues, all the stuff that they have to pay every single week, every single month, now has to come out of their pocket, right? Think about that from the Chinese perspective. If there's a company making things for Apple or for Nike or anybody else, and they were using those Chinese loans, those business loans, as their line of credit before they got paid for Apple, Nike, you can rest assured that companies that size negotiate the best possible payment plan they can, which probably doesn't mean COD, probably means a little bit longer than that. So they use their bank loans to pay their bills basically until they get paid by Apple or Nike, et cetera. So it can exacerbate the supply chain. Who asked that?
Sterling.
Sterling, yeah. It can exacerbate their supply chain, our supply chain problems quite a bit, more so than the direct lockdowns, actually. Because in some areas of China, the lockdowns, they were just locking people in the factories. They were still able to work, but they had to sleep at their station. But if they're not getting paid, they're not going to work. And it's not all of those loans, but it is some of them. So if it becomes, a large recurring problem, then it could end up exacerbating or stretching out the problems with the supply chain.
Waka Waka, I think zero COVID is a two-prong. One is to calm the housing issue in China, and the other is to hurt the West. And we didn't even talk about the house. They're having some major real estate implosions over there. So that could be true. Rich, here, Bob, what is Saudi Arabia? What will Saudi Arabia do with all the money they made from this oil crisis?
Same thing they used to do. They distributed to the population to calm civil unrest. Every citizen of Saudi Arabia gets a check from the government, just like they do in Alaska, their portion of the oil reserves. There are some people, depending on class, that make as much as $70,000, $80,000 a year off of their check of the oil reserves. The height, if I remember correctly, don't quote me on this, during the height of like the oil embargo, when there was really nobody else selling crude and crude oil just went through the roof, families were getting in the range of $300,000 a year to just not work and to, follow basically the House of Saud's ruling directives. So they now have much bigger coffers to continue with their supposed transition away from fossil fuels. They can fund that. And while they're funding that, they can quell civil unrest with money, which is what they've always used it for.
Let's see. Dan Jett, restaurant owner here on the Fry Cook.
Nice.
He had that conversation with many moms with their kids standing next to them unemployed.
Ugh.
So, let's see. What else? Oh, no. No, George, you didn't go there. If restaurants have short staff, why not hire tall people?
All right, I'm done. I will see you guys on Thursday. That's it.
That's a Mike joke.
That is a Mike joke. That is such a Mike joke. Does he live down the street from you?
No, but you made a really bad joke like I would, George, and see Bob's just rolling his eyes. So it's like, oh boy, Ferraris will always deliver more than they cost. Really? Okay.
You're right about that, Ted.
All right. I think I'm going to have to do some more analysis. What if we are in a 100-year trend that just broke and now we're going down back to the 1920s level? Ooh. Well, that would be a round turn, wouldn't it? That would destroy some wealth. All right.
This move was a good opportunity because you came down to the breakout level on the doubles. So, well, Mike's going to talk about that. I'm going to go.
All right. Thank you for being here, Bob. Be back on Thursday?
Yep.
All right. We'll see Bob again on Thursday. Thank you, Bob.
See you guys.
All right, everyone. Small Mike coming back. There we go. Small Mike. Okay. What do I still see? Here's what I'm watching. We've had these doubles trigger. I'm getting to this. John. We had the doubles trigger. The double in the S&P hit the first target. We're now getting the pullback with cycles you see down here at the top. Top daily cycles, which can cycle back and forth within the weeklies turning up. And because I have a probability associated with this pattern being triggered, I'm expecting still to complete the pattern, but I would not be surprised for potentially bearish to sideways price action to get these daily cycles back to the bottom before making one more substantial push higher. That's what I'm going after because we have these patterns that have triggered. We had the other little doubles triggered that ran up and already completed. Now we triggered the little slightly bigger double. Okay, and again, on a weekly basis, that takes us, we're in the weekly rotation zone, getting that first reaction. Generally, I've talked about this before. Generally, when you hit these higher time frame rotation zones, you get an initial reaction, and then you make one more push in. And you can see the cycles up here. Is that guaranteed? In these markets, nothing's guaranteed. But would I be surprised, especially with all those other doubles I covered in the weekly sector overview that have not fully hit their targets, and like Amazon still hit the double that hit that first target today? There's still some upward bullish price action still left to play out after we get this potential pause and another move higher. Now, could this be a single bar pause and we push up? Sure. That's why I'll be watching to this high for a breakout pattern. What was interesting on that 4 hour, we came down, the rotation back up out of the channel, but then the dip in. So I'm really paying attention to anywhere from about this 4100 to about 4111 to make sure if that holds. If that breaks, I will start watching for the next bigger pullback area. The next bigger pullback area would be down to the breakout on this double and potentially even back to about 4,070. Again, we are still in tactical trading, but then on the next run up, I'm expecting to hit some of these higher price targets. And remember, the 50 to the 62.5 of this sell-off from the highs at the end of March to the lows about the third week in May, this would be a major target area also, and you see the doubles are within that. So that is the current thesis. What would break that is if we got a close back below the 62.5 of this run-up move. And that's a long way off. Remember, nothing goes in a straight line up or down. It can go for an extended period of time, but we're also coming off of very, very oversold conditions this was substantially oversold. And that generally doesn't resolve itself in 1 week. Could it have? Sure, anything's possible, but it generally doesn't resolve in 1 week's time. So overnight, watching this area, if we do break below that, then I'm going to be watching the 50 and closer to this 37.5% for the next pullback area. I hope that is clear. You're asking on the monthly head and shoulders on the Nasdaq. Let's see this. It's a little ugly on this, but if you were to map those out and said this is the big head, and you had this, it's almost a double weird shoulder thing, and on the monthly it does not show up really well, but because you'd almost have to name this the shoulder and this the shoulder. It's a really sloppy pattern. That's the challenge with it. But if I had to call it on a monthly, I'd actually have to use this really lopsided pattern. You could almost make this the shoulder, though, too. You can't make this the shoulder. It would be downward sloping, and that really blows the pattern. Just for the sake of, let's just see, is if we went in like this, and this is horribly very sloppy. But if we wanted to just see from a perspective, if it did play out, you'd be back with the full target of about 8,900, right to this key prior breakout level. So it would take us back to those that breakout level from the March 20 lows. So from those COVID lows, it would pretty much take us not to the COVID lows, but to the breakout pattern on there. Downward sloping head and shoulders tests out horribly. And I was just seeing with that being a shoulder where it would be. That's why I'm not mapping that out. But downward head and shoulder, downward necklines test out horribly. Let's just see. So for the Nasdaq, we're getting that pause in here again. Weekly cycles still not overbought at the top. Pretty neutral on the RSI daily. We're getting that pause with the cycles trying to roll over. So what does that mean? Again, I'm watching for sideways to potentially down unless we really break out strongly. You see dipping below that channel, then rotating back up. So key area I'm watching is on the Nasdaq 21,550 to about 21,535. If we break below that, then I'm watching for a return to about 12,345 area, 12,320, 12,340. And we already have the next higher targets. Those are the same from earlier. Dow again, cycles at the top. Look like they're rolling over a little more aggressively. RSI, we get to overbought on the Dow. Everything's trading in such lockstep today. Boom, little bounce. The key area on the Dow I'm watching is about 32,825 to 32,860 area. We break below that, I'm then targeting about 32,500, 32,520 area. Russell did not get much of a bounce. So the thing that I'm watching for in order to even consider getting short-term bullish again is a real break above 1877. If we do pull back again, next target would be about 1834 in the Russell. I've already talked about crude a little, but this is a pretty significant topping pattern. I actually didn't. The algos latched on to that one and just sold. I mean, you want to see some selling. When that stuff came out about the sanctions and Russia oil and everything, that was the algos. They just dumped it. What I'm watching for with cycles now starting to roll over, we probably put in at least a short-term top. So I'm going to be watching for the bigger pullback. 112. My initial pullback area would be about 112.50 to 113, and the bigger pullback would be about 110. Let's see. I want to get through some other stuff. Notes. Coming back, getting that pullback move, cycles rolling over on the notes also, but we still in very bullish mode with this pullback. We're getting the first reaction with that weekly rotation zone. The only thing that shifts it to bearish mode is below 118.19 on a closing basis. And we still, that now turned into a potential triple. Really sloppy. I'll still keep this on and we'll take a look at it tomorrow morning. Dollar index. Remember, it completed the pattern, tried to get a little run up and roll over move, giving me a pausing bar now. So if we break lower, remember, we're into the rotation zone, and I'm actually surprised we didn't get a little much more of a bounce, but the next lower targets are 179 and 130, and here's what I'm talking about. That just takes us closer to the bottom of the weekly rotation zone. Then I'll start watching for another bounce play again. VIX actually looked like it was going to rise up a little this morning, and then this is a pretty, based off the way the market was so mixed, that's actually a pretty bullish VIX move. So no fear coming in. I'm still watching to see what happens when it breaks down below 25 again. Let's see. Amazon again now broke above that with just a lot of momentum today. You see here, this was this was the play. This is where I talk about the breakout above this key level and a retest, and then this running up. So that's the way to get in these intraday. And then I'm just keeping an eye on this little pattern with Amazon tomorrow, because we could get another, again, a short-term pullback. It's hit that first target on that double, but could you get a pullback theoretically back down? Because this was a pretty big ramp move. You see, that doesn't even reconnect it with the 4 hour, and that just takes it in a 1 hour move. So I'm going to be keeping an eye on that tomorrow morning. So that would be a gift if you wanted to get still back into Amazon for a potential bullish play for just, again, this is not a long-term bullish play. This is a short-term bullish play. And look, that pretty much takes it back. Second target is the weekly rotation zone, the bottom of it. And the final target is right at that 200 week. So you could easily see that pop before the next major rollover in Amazon. You wanted Shopify. Again, this is still, you're going against the rotation zones, but the only play here for me is the short-term little pop above about 390 at this point. Above 390, still the same targets as before, 412 area. And then above 412, if you could get a little more of a run on, you're to about 430, 433, 435 area. Do you have a little... you could almost trade this. I don't like those hitches in there as much, but you could almost trade this as a double. So let me get those targets up there, because that would trigger above this 412, this level I already just talked about. So if you break above 390, you're targeting this 412. Let me get 413.70. You get the close above there, 461.55, 450, 485.48. That's only if that triggers, and that would just take it into the weekly rotation zone. And look, that's back to the breakdown area. So that would be the only bullish play that I have for Shop. If you start breaking, though, below about 355 again, I'd be targeting a retest of these lows. And then that double would be off the table. Hey, Charles, welcome. Thank you for being here. Thoughts on SD? Yeah, based off of what I'd be, again, in any oil plays right now, it's more aggressively raising stops for the bigger potential topping pattern. You can see SD coming out of overbought condition, but just barely, and just tapping the daily rotation zone. But if this thing's been on a pretty decent run, so you could easily see it reconnect with 2060 to 19 to 20 bucks easily. So keep that in mind. With again, I don't know where you got in, but I would not be chasing this at this point, and I'd be watching for that bigger pullback, and even straight here to the prior breakout zone, based off if we get a little short-term top in oil. And look at that, that's right between the 50 and the 62.5. So a key area for a stop then would be on a more conservative basis. You start getting below this 2260. Now, if you're in it for a very long term and you've been in it for like weeks or months, I'd then keep a wider stop. But your next major harmonic down, if I was in this for a very long-term position, my stop would be below 15. But if I was in it from an aggressive position, my stop's closer to this up here. So if we get that bigger pullback to the weekly rotation zone, I'm then out and look for a re-entry play. Let's see. We'll take a look at cryptos in a minute. Let me get through a couple stocks. Then I have to wrap this up. Apple, little pause bar. If you get a break above 150, then I'm targeting the 50-day exponential about 155.50, and that just takes it back to this major prior support becoming resistance. And so if the market keeps running, and that takes it back also to right in here into the weekly rotation zone, and then it's another rollover play. This was a double that triggered. You're returning to the sloppy breakdown zone of the double, and then I'm again back into full-blown bearish mode on a rollover play with Apple. So short term, I can still see a little more upside, especially with weekly cycles still turning up. Now, could it pause here and even pull back and fill this gap first? Yeah, that's why, unless I get a strong continuation play, it's wait. This would be interesting to even see a gap fill play with the separation of the 4-hour rotation zone and then a resumption of trend plays up to that 50-day exponential. If you want to know what breaks the pattern right now, since there's no topping pattern, you'd have to get the close below about 139.30 area to really break this short-term bullish play. BG again, this turned into a very sloppy double, and you have all this price action here. I would just be using your harmonics to the upside. You're getting the first cross of the rotation zone after your pullback into the weekly. So right now, my next target would be 120.13. You get a close above 120.13. I just keep trailing because then you're a 125, roughly 125 area. That would be the short-term breakout play. So this could be an area to raise a stop depending on where you got long, or unwind. If it's very short-term, unwind a little, get a stop to break even, and then if you keep getting that close above 62.5, play it for a bigger play right there. I want to just see where the this is just really yucky with that. So yeah, look at that with the harmonics. That's a very key level. 120.22, 120.23, very key level. You also have this resistance, so that's definitely an area to move up a stop. Or if it's very short term, as I said, to take off a little and get your stop up. Yeah, we're bringing in more people. Thank you again, new people. I think you're new here, Charles. You are welcome. Thank you, Paul. Again, that's why it's so important. Keep coming back, please. I don't want to come across like I'm begging, but we're growing this channel. Look, we have new people popping in all the time, like Connor, and we have the regulars. Please come back and leave some comments because it gets us in the wider distribution and we get more people in here to really keep a great conversation going. We have that more conversation stuff with Bob and myself on Tuesdays and Thursdays. And then every day you get some, I think it's good analysis. Get that little pop in Bitcoin right now. Again, I'm just watching for another rollover play in Bitcoin. So Bitcoin, I'm still short term. We broke out to the upside. And short term now we can do some harmonics. And these, you don't want to do the harmonics to here. This was the great place to do it. So you see we got that pause bar there. And then the next target up is 32,920 area. And then my next target's 33,900. And anywhere up in here, after we get to about this 33,913, I'm watching for another potential rollover play. So that's on Bitcoin. Ethereum, which we still, and I covered this, I believe yesterday, we have that potential double still in play. It can't get through the daily rotation zone yet. You start getting a move above 2038 though, I'd be really watching for the target of about 2145 to 2170. And before I can get even short-term bullish, and by short-term I mean more than a day, it would be to trigger that double. William, we always miss you, and I'm sure. Welcome back, William. I'm glad to have you. We've always missed you. Chris, you want, as I call it, planter, but I know it's Palantir. And that was a really nice, that was a funny shake and bake pattern. So you broke down from the horizontal channel, which I still have on here, hitting that first target, and then you know what I talk about when it goes back through the midpoint. It got bearish to shake people and hit that first target. Fantastic shake and bake play. Coming out the other side, hitting the full target on the other side. So now remember, another one of these techs, you still have a gap to the upside still left to be filled, which should take you to 948. And right above that, you have the weekly rotation zone. So any upside plays are limited in my book. Could it go a little higher than that? Yeah, it could go into a little more into the weekly rotation zone, but you have this breakdown area. So again, short-term plays. Look, your 37.5 harmonic with the weekly rotation zone and just that gap fill, so you can use your next targets 948, 950. If you did get above 950, my next target would be 1065 area, and that takes it to, what's this, everyone? The breakdown zone. So prior support, remember, don't use the wicks, use candle bodies. It's much stronger. And then right here, 50% harmonic from this sell-off, right at the breakdown zone. And even if we rallied up into this area, so between about 1070 to about 1165, we watch for a rollover play. Now, it already hit that horizontal channel breakout. You really don't want to see it drop below this. You still have a little gap here, but you really don't want to see it drop below. If you're trying to play this from the bullish side, you don't want to see it get much below about 825, because then it would be a false breakout. And you could even fine-tune that with using your real short-term harmonics. You could even say, all right, 825 is the 50, so I'm going to give it a little more room to 8. So from my perspective, because you get a move below 8, it retests these low areas. That's how you put the concepts together. Well, thank you, Ted. All right, I'll go with great analysis because Ted said it. What happened when we triggered a double top? Does it automatically reject it and dumps? Oh, on Bitcoin? I didn't cover that. What happens on Bitcoin when we trigger that? Christoph put it in. Again, I'm watching for the monthly trigger. We did not get the monthly close below that. What does it automatically dump if you trigger this massive double top? No, but I can see it unraveling pretty quickly. And the first target is back to that 10 area. You know what's interesting still on that monthly basis? We did not get the close below the 62.5 either. And on the weekly basis, here's the one I'm watching. On the weekly basis, we didn't get the close. We didn't get that key close. Where's that 62.5? That 62.5 on the weekly basis, which we aren't able to close before. So it's still holding up without triggering the major. Why am I watching that 62.5 level too? And that's off of this. That's off of these bigger harmonics. Because we could close below that on a weekly basis, then we should also target about 12,000. So we'd be targeting 10.8 to 12,000 longer term. But they have not triggered yet. And so is that an automatic dump? Which theoretically could be. I mean, you could have like something like Tether completely blow up. And if that blows, if that were to blow, then it would be a really quick unraveling. Otherwise, it could just be a slow grind, especially when the Nasdaq rolls over again. All right? When you see a bunch of Nasdaq roll over, dude, it's still running at 70-something% correlations with the Nasdaq. Could see a pretty big dump play, and I'm expecting another Nasdaq rollover. I know to a lot of you that's absolutely shocking that I'm expecting another market rollover at some point. Oh, we're with phenomenal analysis. Well, this is getting better. Do I think it will ever go? Is that $2 or 2,000? I'm hope. Could it? I mean, yeah. I mean, look at the second target on that massive. 1725. Again, it's a pattern. And I'd really be watching the 100% because remember, we get through these targets. The next target would be the 1725 to about 4,000. And we'd have to fine tune it at that level. Is it possible? It is completely possible, especially if these stable coins start blowing up. Thank you, Wavy. And you have to analyze both bull and bear. Otherwise, you can get, those blinders. You don't want blinders, whether you're investing or trading. That doesn't mean you can't take a trade. You just analyze it both ways, because then you also know where you're wrong on the trade. Have you noticed that I say, okay, what tips it? I don't have a topping pattern, but what tips it back to bearish mode? Why do I need to know that level? Because let's say I'm more of an intermediate term swing trader. I could use those levels for stops and keep my stops there. Now you get a bearish pattern that triggers, like we get another double top pattern that can change the stop levels. But that's where we really got to work on, analyzing everything and not getting caught. $2, I don't think it's going back to $2. Thank you, John. Really appreciate that. I did not do Tesla. All right, you're going to have to Dewanit. Did I say that word? If I messed up your name, I'm really sorry. I'm going with Dewanit. But if you want to give me the phonetics on that, again, I am terrible with names. That's why my parents named me Mike or Michael. I guess my formal name is Michael, because I can pronounce that. I am terrible with names. If my parents named me a funny name, I wouldn't even be able. And I'm not saying your name's funny, but if they named me like some weird Elon baby name, then I would never be able to pronounce my name. I'd be mispronouncing my own name. That's how bad I am. We're getting that pausing bar. Cycles are just starting to hit the top on the daily. What would concern me is if we start breaking down below really the rotation zone, below about 722, targeting the gap fill, and then the 50% level to 62.5 from this run up. Okay. If we stay with the rotation zone, then I'm still watching for the potential higher price point into the weekly, especially once the Nasdaq turns up again. We could easily see it back to 815 to 830. All right. So the short term, you want the short term stuff. Pay attention, especially 720 area. Get below 720, gap fill, and then you have the 50 right there, where it's 700. You start breaking below that. I'm targeting 680 then. You get a close below 680, I'm retargeting the lows. To the upside, this is interesting, the 50 on the daily, the 4 hour, we break above 780. And then here, I can now put your harmonics up here. 780, 798 stop level, 818 to about 830 is a potential, definitely a target area to take something off. Any chance HCMC? I don't know anything. Is there any chance that will recover? If that's the stock you're looking at, what was that? I have no idea, but I wouldn't bet on it unless there's some Reddit thing going on. Yeah, let's see. It's more like, do you want it? Do you want it? Okay, do you want it? I hope I got that better. Did you do NVIDIA? No. And then I got to wrap this up. I got to take 5 dogs out for a walk. NVIDIA triggered the double. Yeah, I forgot to cover this today. That's another one that triggered the double actually on Friday, getting that little pullback today. Anywhere in here, even if you were to pull back to 177, I'd still be in the bullish camp with this for another push higher. So you can keep an eye. You still have this little gap here with the 4-hour rotation zone. So even if we pull back tomorrow, I'd be focusing on the gap with the 4-hour rotation zone and then watch that potential rotation back up. But that would not invalidate the pattern. So in a reminder, the first target is 197.04. Elon is an alien. All right. You are welcome. You are welcome. Do you want it? Do you want it? I'm going to work on it. Predictions are always on point. Well, they're not predictions. I don't try to predict. I mean, sometimes I get in that category just because people ask me what I think. But I like to really have patterns trigger. And is everything I do correct? Well, I can't say I'm wrong because the patterns aren't 100%. So if a pattern doesn't play out, like let's say NVIDIA comes back down, the initial stop would have to be below, it hasn't hit the first target yet, 166.50. If this came back down and closed below there, yeah, technically I'm wrong, but the pattern was wrong. And I'm not saying that to shirk my responsibility. That's why I can't give direct trading advice, which you see in the disclaimer. But what I'm saying is, since the pattern's not 100%, the pattern's wrong. The pattern's in the upper 60s to low 70s, depending on what market you're in. So I got to go off the stats. That's why everything I try to do is not a prediction. It's more of a pattern, but I will admit I do give my thoughts like short-term bullish or short-term bearish, medium-term bullish, then big rollover play. That's more of a prediction based off what I think the cycles are going to do. So, because I have to have some entertainment value besides my wonderful shirts. 5 dogs on a walk, the Mike Arnold story. Yeah, if you see some crazy guy walking 5 dogs, it might be me. You are welcome, Paul. Always good to spend some time with you. You are welcome. Thank you for all you do for the community. And could everyone please do something? Please I know there's a bunch of people still watching this. Please, when it's done, go back and leave a comment on YouTube and like the video or dislike it. I don't really care, but leave the comment, even if it's just thank you. Take that 30 seconds for me. Keep the channel growing. With that, I will see everyone tomorrow morning. Oh, we didn't go over tomorrow morning, the economic calendar. Sorry, let's just take a quick peek. So we got mortgage applications, which I'm expecting a drop, but we'll have to see that, and that's for May. ISM coming out at 9, and global manufacturing PMI final for May at 8:45. So that's going to be very interesting. So we will get to be in the market open before that hits. And then we have 2 speakers and the beige book tomorrow. So you got to be on your toes again. With that, I will talk to everyone later. Have a wonderful rest of your evening. Thank you for watching. Bye for now.